Alright guys, so now you want to master the fundamental analysis of a company. So now you have learned all the basics and you have just learned all the mistakes that you should avoid before investing in the stock market, and also you have opened an account in one of the beautiful broker in our Indian stock market. So now the next step is to analyze or to do fundamental analysis of a company before investing. So let's dive into the video. So right now we are into the website of Ticker Tape, where I personally use the fundamental analysis of any company, right? So right now in front of us there is Reliance Industries Limited, where we can see all the features, all the financial tools of this companies, right? So here we can see the movement of 1 month, 1 year and 5 year. So yep, this is the movement of whole 5 year. This is the performance, valuation, growth, profitability. It's a large cap sector, low risk, energy, PE ratio, PB ratio, dividend yield, sector PB, sector PE, stock dividend yield, sector dividend yield, everything. So for a beginner, this is everything is like confusion and all just stuff that is like khichdi making, right? So what you have to focus first, what are the key things that you have to first focus before investing? So let's just get into it. So these are all the factors these are all the secondary factors, but the most primary factors that we have to look is the financial reports of the company, that what the company is making, its revenue, its profits, it's all the balance sheet, right? So in Reliance Industries we can see right now over here is the income statement, right? The total revenue, it is that we will see the last 5 years of this company, right? In 2020 it was in positive, then 2021 it was little less, and then in 2022 it recovered again, in 2023 it is growing, and in 2024 it is also growing. So in revenue part it is okay, right? So now in EBITDA, right, it is earning before interest, tax and deductions and all the taxes, like it is the income before deducting the taxes and all that part, right? So this is also increasing, it is a green line, so this is also in a tick mark. Okay, now we will see the net income, right? So in FY 2022 it was approx 40,000 in CR, and then in FY 2021 it is growing, and it is in 2022 it is growing, and also 2023 it is growing, and so in 69,000, like approx 70,000 in 2024 also. So the net income of this company is also in a healthy position, right? So now the income part of the company is okay. Now the second most important part is the balance sheet, right? So we have to see that, right, we have seen that the revenue is constantly growing. So we have to see that the assets are also growing or not, and the liabilities are reducing or not. If the liabilities are reducing and the current assets are increasing, then we should remember the company is in a healthy stage, right? So now in this company we see that the last 5 years chart, it was in 2020 like approx 250 lakhs, then it is like increasing, then in FY 2022 it is slightly declined. So again in FY 2023 it has increased, and in FY 2024 it has significant growth, right? So the current asset part is also looking healthy, and so in the total liabilities of a company, right? Now it is 2022, it was 7 lakh, in 2021 it is again reducing, and in FY 2022 it has increased a bit, then in 2023 it is increasing, and in 2024 it is also increasing. So now here is the most important part, is we can see that the liabilities are increasing of the company, but it doesn't mean that the company is not in a healthy state, right? So if we see that the assets are also declining and the liabilities are also growing, that means it is not in a healthy stage of a company. But in this case the assets are also increasing, the liabilities are also increasing. But in the other hand also, the income of the company is also increasing. If you see the revenue portion, it is constantly in a healthy stage, and also the net income of the company, it is also growing in a good stage, right? So the balance sheet portion in also in a healthy stage. So right now the cash flow, it means over here we have to see that the free cash flow, it means in this year how much cash is liquid, is there liquid in the hands of company or the in company, right? So if we see that in 2020 they have liquid cash of around 18,000 crores, and in 2021 it was a severe crash like minus 80,000 approx, and from there this is a severe growth like from minus 80,000 to positive 10,000 in 1 year. This is a very good sign of a healthy company. And again minus 25,000 approx 26,000 minus, and again plus 6,000 crores. So right now company has cash and it has the potential, when it goes negative it again turns to positive within a year. So the balance sheet and all the statements of the company, financial statements of the company, are also in a good stage. So now we will see the percentage of the ownership. So now we will see the ownership of the company. So right now over here the total promoter holding of this company is 50%, more than 50%. Mutual funds are also there, that is 8.5%. The other domestic institutions are also having 9.75%, and also the foreign institutions are also having 20%. So this is a very good sign of a healthy holding of the promoter holding, right? So if you can see that the promoter is having maximum of 50% or having 55%, it means it is a healthy company or it's a healthy promoter holding, right? So it means that the promoter is holding more than 50% of the company shares, right? So now the promoter holding is also good, the revenue part also good, company do not have any debt, such type of debts, company also has liquid cash in hand. So right now the company is in a healthy stage, and till now we didn't see any type of negative signs from this company, right? So right now we come to the calculation of the percentage, how much return the company has given. So in 1 year you can see that it has given approx 2.62% in a negative return, but when I just switch into the 5 years time frame, then we can see that this company has given approx 70% of the return, and that is sign of a healthy company, right? From the past 5 years we have seen a 70% of growth, and if we see the highest number of overall return, then it is like how much 1000%, like from 2000 the company is listed over here, and till now it has given 5000%. But this is not actually accurate by calculating this number. We should calculate always with the time span of 5 years. So if we see that in FD it is giving a return of 6 to 6.5 or 7% in 1 year, and now if we calculate in 5 years, then it is coming approx 35 to 40%. But in this company it has given a 70% return, and that is much higher than an FD, right? So now what we can understand that from this company, so even in 1 year also it has given a negative return, and this negative return is also due to high selling pressure of FII and like all that stuff, because index has also fell in this month around 3 to 4% and even more than that also. So and it is very usual that the stock will also fall more if the index is falling. So yes, and in a 5-year time span it is good, and after all it is Reliance Industries, India's most prominent stock. So this is one stock. Now the first stock is gone, and now the second stock, it is all of us favorite HDFC Bank, the number one bank of India, right? So if we see the financial, first we go to the financials right over here. After scrolling down to a little bit of this website, you will see the financial statements of this company. So the revenue. So if we see the past 5 years data, we can see that in FY 2020 it was in a healthy stage. 2021 it has also grown, and in 2022 grown, 2023 also grown, and 2024 is has doubled. The revenue was doubled in 2024, right? So now the net income is also growing, right? It is approx 30,000, 31,000, 38,000 and 45,000, and from there is a big jump of 64,000. So in 2024 the revenue has an income also increased in a massive way. So I believe that the income and the revenue structure is healthy. And the balance sheet of the company, you can see the current assets of this company. So if we see the 2020 it was approx 88,000, 121, then 155, then goes to 197, then 228. There is a massive growth. And then if we see the total liabilities, we can see that it was approx 14, then 15, then 18, then 2022, then 35. If we see that according to current assets and current liabilities, it is again a healthy stage, because the current assets are also increasing in a rapid way, and the current liabilities, the total liabilities are also increasing in a good way. So if we see and compare with this revenue, income and assets and liabilities, then it is growing in a right stage. And then the cash flow of this company, yes, the company also has cash in his hand, and is a massive amount of good liquid cash in his hand. And okay, now we come to the promoter holding of the company. So right now we can see there is a total promoter holding of 0%. Mutual fund is there approx 22%. Other domestic institutions have 9.33%. Foreign institutions have 41.5%, and retail has around 28%. So do you think I will be considering HDFC Bank? Okay, let's just see the returns of this company. So if we just see the returns of this company is like, in 1 year it has given 8% return. Though the index is crashing, Reliance Industries has given approx minus in a negative return, but over here this big large cap company has given around 8.24% return. But if we go in 5-year time span, now here the main twist is, in long term the company is actually not growing well. It is actually giving lesser return in our FDs also. Because if we keep our money in FD, it will grow around 35 to 40%, and in this stock it is only growing approx 38%. So if we see the promoter holding of the company, that is not at all good, because the promoter holding is 0%. The returns are also not quite healthy. So if you just about the investment purpose, yes, this is a blue chip stock. If you put your money into this, your money will not blow away, but your money will not grow according to the time span that the other stock are growing. You are having much better options in your side. Then why will you choose such type of stocks that is not exceeding your FD rate also, right? So this is the today's video. I hope that you have understood what I am trying to say, that choose the right stock that beats the FD, that beats the inflation rate, and also choose the right stock where your money should not blow away and also should grow right to the sector. The way sector is growing, the way index is growing, should beat the index also, right? So this is for today's video. So If you found this video helpful, smash that like button, share it with your friends, and subscribe to Dealing Dolphins for more actionable financial tips. Let's level up together.